Yeah, it's another episode of the Crypto Radar podcast, and today we have uh, a big story of a guest, Hugo Renaudin. Have I pronounced your name right there, Hugo?
Yeah, it's fine. You can say Renaudin. It's the English version.
Renaudin. Okay. Well, I'll do my best. My French isn't great. Hugo Renaudin, the founder and CEO of the LGO exchange. Welcome to the Crypto Radar podcast, Hugo.
Thank you very much for having me.
Yeah, it's great to have you on. Your story is quite it's quite an amazing one. What I have here, as I understand it, 8 months after leaving the army, the French army, you went into the financial world, and then pretty quickly after then ditched that to join the crypto world. Is that have I got that right?
Yeah. Well, there's a bit more details to that, but yeah. So basically, I grew up in France, and in France we have this weird system where basically, if you after high school, you have two choices. You can go to university like in the US or like anywhere in the world, or you can choose to work very hard for 2 years to try to get like access to like the top schools in terms of what you learn and so forth. So that's what I did. And the school I was in was linked to the army. It's an officer school. It's called Polytechnique, and it was so yeah, I did like a bit less than a year in the army, and that was a good experience. I was like 18 or 19 at the time, and so I was like lieutenant. That was a great experience. Like fun stories. So I did like a bit of training in France, and then I spent some time in the French West Indies. So there's a couple of islands in the Caribbean that are French, and there I had to take care of a platoon of 30 young soldiers from Guadeloupe. So that was pretty interesting from a human perspective.
Now, you say taking care of young soldiers. You were what, maybe 2 years older than these guys? Like,
I was like almost like, I think in average I was younger than these guys. I was 19. And like the only thing I had done in my life was to study and to do math and stuff like that. So that was like, quite interesting, and it was a good experience. And then after that, so I went back to like, let's say, a normal life. And got interested in finance, like many people that study math do, and so that I tried. I did a couple of stuff there that was interesting, and I met Bitcoin, and so that's been my focus ever since.
What was the hook for you? What was the appeal of cryptocurrency for you from a traditional finance perspective?
So there's two things I think that were interesting to me. So the first one, obviously, the technology, and having a technological background, kind of understanding the blockchain aspect, the Bitcoin. Like when I first heard about it, which was in around 2014, it was kind of an intriguing world, right? Because there was not a lot of stuff publicly available for like complete newbies in this space, so that like we had to dig for that, and that was quite interesting. And so that intrigued me, and like obviously I didn't have at the time the experience of people that have 10-15 years in finance that know what works, what doesn't work, but still I was intrigued by the technology and the ecosystem. And the second reason I think was, for me, I was like in my early 20s, I was like, okay, so this is something where there's not a lot of competition. This is something where there's not a lot of people looking into that. And so for a young guy like me, if I get interested in that, and if I start to build into that, there's a big opportunity as well.
Sure.
Try and build something. So
right. So you're coming from the world of like BlackRock and in France, correct my pronunciation if it's wrong, but the Financière de l'Échiquier.
Yeah.
And that's basically your institutional investment in France, if I'm right.
Yeah, absolutely.
And so what do you see from there that, you've carried over to your world in cryptocurrency? Because my feeling is that your experience in the institutional world is kind of your asset that you've brought along with you?
Yeah, I think so first, I don't have like a ton of experience in this world, so like it would be a lie to say that I bring a ton of experience. But what I think just the understanding of how things work, how people organize themselves, what's the relationship between an asset manager, a custodian, an exchange, a prime broker, like all this kind of market infrastructure, which can be quite complicated to understand if you're not coming from this world, or you don't have at least a first idea of how things work. And I had the opportunity as well to work on a trading floor for a brief amount of time in the FX space, and that was a huge moment in terms of learning, in terms of understanding how people react to the market, and just understanding like this industry, how people think, how the different structures work together, and that's something that so obviously I learned at this time, at this stage. I'm still like obviously you learn every day in this industry, but that's the thing that I think I brought that is very useful to me right now. It's to understand the relationship between different institutional players, between investors, between retail kind of investors as well. How they come into play into this big ecosystem, and so that's what that's the main takeaway of my years in working in finance.
Right.
So go ahead.
Yeah, I mean, this is kind of interesting. So LGO must have been. I'm not sure. When did you launch? Was it in 2017?
So we did. The company started in 2017. We did an ICO, which ended on February 2018, and the platform has been live for 18 months now.
Right. Okay. So you would have been fairly early on in recognizing that there was a need for a platform that institutional investors would trust.
Yep.
It seems to me.
Yes. So when we, so that's interesting because when we launched that, so I launched that with my business partner, Frédéric Montagnon, who's like a bit older than me and has created several startups in the ad tech space. And so we were looking at this problem with almost a fresh view, because like again, we don't have like dozens of years of experience in traditional finance, so it's like you kind of have this advantage where you can think with fresh ideas about this specific problem. And what we were seeing at the time, like we're coming from the MTGOX experience, we're coming from this world where there was a lot of manipulation of prices, and especially in 2017. That was like pre-bubble and during the bubble as well. And so we're like, okay, so there's something there. There's definitely interest in this space. What is missing, right? What do we need for BlackRock or for a large hedge fund to come into this space and trade? Because that's where the value is. Like that's where the big money is gonna come from.
Sure.
And at the very beginning, like kind of our approach was to say, okay, there's this big problem, which is the problem of transparency. And if this problem of transparency is not solved, right, if there's not a transparent price formation, if there's no transparency in terms of how the assets of the clients are held, how things work together, well, things are not going to happen. So that was kind of our first thesis, which has obviously evolved with with what we have now, which is experience with real life clients. But that was the start of our thesis. And we oriented the ICO on that. So how to solve those transparency issues with technology.
Right.
And so that's something that we've done. With the blockchain technology, we can guarantee the transparency of everything that happens on our platform. That was really the starting point. And I do remember at the time when we launched that, there were a lot of people that were talking about institutional money coming in and so forth. And I think looking back, obviously 2017, 2018 was not the time when this thing where it was bound to happen, and probably it's probably going to happen until a couple of years. But that's really how we approached that at the time.
Right. And so if I can just sort of get a glimpse of, do you see yourself competing with backed CME? Are they kind of now your competitors?
It's a little bit different because the way we approach the market right now is that we focus on the crypto native institutions. So we're not CME in the sense that like today, if I'm an institutional investor, it's way easier for me to buy a future, right? If I want to have exposure on Bitcoin, I'll buy a future. It's going to clear through like the pipes that I already have for all the futures that I trade with CME. So that's relatively easy. Holding physical Bitcoin, getting used to other kinds of regulation, other kind of products, like there's no ISIN code for Bitcoin, which is like from an accounting perspective for those guys is a big deal. And so for them, it's way easier to use like BACT or CME because they have products which are regulated and work like any future. So our approach is to say, okay, you know what, we're probably not going to focus too much on these guys. And anyway, for an early stage company like us, it's like you go into like RFPs that can last for months, and you're not even sure that they're going to trade. So what we decided to do was to focus on what we call crypto native institutions. So that's hedge funds, OTC desks, crypto asset managers, like the people that come from this crypto space and that that have businesses that are very similar to like businesses that you have in traditional finance, but it's for crypto. And so they trade, they're used to trading on exchanges that have a subpar service compared to us. So that's where we can really have an effect.
How does this connect to the whole concept of using stable coins and kind of enhancing trade via stable coins? I know that's something that's close to your heart.
Yeah, absolutely. So when we started the exchange, like we were wondering about which assets to list and how to approach the assets we make available to our clients. And very early on, we were lucky because we had good feedback from our close clients and our close market makers. And we realized that for the crypto native institutional world, there's two types of assets that matter, and that's with which you can capture like perhaps like 80, if not 90% of the flow. It's Bitcoin and stablecoins. Bitcoin, why? Because it's a liquid market. There's a lot of trading. You can be a fund and have only a strategy on Bitcoin, and that's going to work. You can hedge on a variety of different instruments. There's options, there's futures, there's a spot, obviously, but so it's really like Bitcoin is king in the crypto institutional world. So obviously we're going to list that. And then we realized very early on that there was a problem. We were doing regular Bitcoin to USD stuff, and like it's a problem because clients cannot withdraw during the weekend. They cannot deposit their funds. Like it takes time, like there's the whole Fedwire system. So, and at the time it was the launch of USDC packs. And so we listed that. And that was very interesting because we saw obviously that, there was an uptake in adoption of those stable coins. Today, I mean, we only trade in stable coins, like the USD aspect of a BTC USD pair is only done through stable coins, and that has a big impact. So that's on the trading of Bitcoin. Along the way, something that we've realized is, especially talking with clients in Asia, in South America, is that there was a huge demand for stablecoins, even stablecoins like Tether. And at the time we were a bit surprised because you had all this controversy about Tether holdings and all that. And I think that since there was the lawsuit against Bitfinex and Tether, like the market cap of Tether has done 9x, which is huge. Like it's like $9 billion. It was at $1 billion before. And so we're quite curious about that. And we kind of discovered this use case where you have people that are in countries like Colombia, Brazil, Mexico, like South American countries, and they want to have access to a USD denominated kind of instrument, which is easy to use. And Tether and stablecoins are extremely useful for that matter. And so that's a big focus that we've had lately in our expansion to South America and with our clients, everywhere. It's to be one of the best liquidity providers for stablecoins.
Paul and I have kind of debated about this before, and we've talked about, are stable coins, in the end, a threat to to Bitcoin, for example, and I think I was saying something along the lines of, well, to me, they complement each other, right? They're like peanut butter and jelly in a sense. But Paul, I forget what your stance was on that. What were your thoughts on that?
I remember the conversation a little differently. That maybe you may be right, and my memory may be failing me. No, I was sort of my question around this is to do a stable coins actually a threat to fiat currency? Because as Hugo just described, they're clearly easier to, or they're perceived in some parts of the world as being easier to get a hold of than
I think it really depends on, I would say it depends on how because there's stablecoin and stablecoin, right? So like you have Tether, which is a stablecoin, which is a non-regulated stablecoin and widely available. And that's why they have so much success, around the world, because it's very easy to get, and there's the early mover advantage as well. But the fact that you don't have to KYC to redeem, or like those kind of stuff, like makes it easy to use. And when you look on the other side of the spectrum, you have like central banks, CBDCs, things like that, which really work in a closed network at the end of the day. And so that streamlines the a currently existing network of transfer, like SEPA in Europe or like the FedWire system in the US. It makes it more efficient for sure, but it's not the same use case as a non-regulated or decentralized stablecoin, like whatever it is.
So where would you, for example, where does USDC fall into that?
I would say it's like more it's obviously on the regulated side of things, because that's the stance that they have. So it's, if you buy USDC, it's great, and it's like it solves a lot of issues. But at the end of the day, you still need to be compliant with US laws if you want to have actual USD, and you need to have a bank account as well. And one thing that is that I find fascinating in this space is that there's a lot of countries where people don't have access to capital markets, so they don't have access to a US bank account. But they cannot invest in anything either. So they invest in, like, if you have money in such a country, you invest in a brick and mortar business, invest in the local economy, but you cannot really, if you're like, you're doing well in a small business, but you're not super rich, so that you have a broker like that can give you access to stock markets and things like that. There's not a lot of things you can do with your money. And so you cannot reinvest it in the economy like you can do in the US. And I think that's the strength of the US system. And what this, let's say, technology, what these kinds of assets allow to do is that anyone with a mobile phone can technically have access to a USD bank account, a Euro bank account, yield, capital markets. If one day we tokenize like all kinds of stocks or bonds or whatever it is. So like, it completely opens the way to a completely open financial market for everyone to interact with, and that's really the value for these kinds of assets.
And do you see then, say, the less developed world or those without access to capital markets as being the first drivers of the mainstream use of cryptocurrencies as investment vehicles?
I don't think so. I don't think it's a tail end stuff. Like I don't think the tail end drives the adoption,
Okay.
But it's definitely the tail end that benefits more. Like if you don't have a bank account but a cell phone, like having all the benefits of a bank account on the cell phone, that changes your life. But I wouldn't say that those are the people that drive things the most. I think, as in everything, it comes with the biggest player. So if you have a big, a big firm or a big company which starts using stablecoins to, send dollar to their subsidiaries in different countries, like that could be a big driver of adoption. And if more and more companies do that, it becomes more and more interesting. And just a side note, but what Circle has done with like their kind of business account for USDC, I think that's very smart, because that goes completely in this theory. So I would say like the adoption of stablecoins in general in the infrastructure will come through like big players, whether it's the Libra consortium through Facebook, or whether it's a CBDC, whether it's JP Morgan with a JPM coin. Like I think it will start with like big players trying to democratize that, and then at the end of the day, the tail end will obviously benefit from that.
Right. Okay. And
what are your thoughts on? Sorry, go ahead, Paul.
Sorry, I just wanted to close on the Tether thing. Do you think that Tether fears have completely disappeared? Do people care anymore that there's no attestations? We're not, because there's still no it's still fairly opaque whether they're actually backed by deposits. Have those fears completely dissipated?
I would say that, yeah, that there some of our clients don't really like to use Tether because there's this risk which creates a lot of volatility that you cannot really hedge, right?
Sure.
Because like one day you can learn that, okay, like there's 100% of the holdings, which is fine, or one day you can learn that there's like 70, 80, 60, whatever it is. So that's the volatility, the fact that the volatility is not so understandable, to be honest, can be a problem especially for liquidity providers and people that try to price this. But from an end client perspective, they're only using that as a medium. Like, sure. It's you get Tether, transfer it to someone, you get something else in return. So what matters is that from the moment you use that as a medium, like it doesn't devaluate too much, but it's like you don't buy and hold Tether, like, or at least not that I've seen of. That there's very few people that do so.
It's a medium, right, for moving from one thing to another. Yeah, I was going to ask you about central bank digital currencies. What are your thoughts on kind of the talk about that and the trend to see like a digital yuan, and they're talking about digital USD possibly. I think isn't what's his name, Giancarlo? I think he's talking about that today, is he not? With there's something going on today with that. But anyway, your thoughts on CBDCs?
I think it's. Obviously, it's a great opportunity for, like, frankly speaking, for states and for central banks. Like, just giving one example, like in the US, like there was a stimulus check that was sent to American citizens in the country. I mean, from an operational perspective, that's a nightmare to do, because like you need to find a register of all the people that are eligible, which is like, in and of itself complicated to do. Then you have to ask the banks to do that. Same thing for businesses. There was the payment protection program. So those are the banks that do that, because the state cannot do it directly.
Right. So
that creates a layer of intermediation. It's a lot of work for all the intermediaries, of course, and it's not the most transparent and straightforward way. And I think that, if I remember correctly, in the first draft of the stimulus plan, there was this plan of digital dollar issued by the Fed. And I think it's quite interesting that it comes there. So you replace that by a smart contract or a token, infrastructure where all the citizens have a wallet, and like you just, you write a line of code, you edit it, you press enter, and that's it. People have their assets. I think it's like, just from an operational perspective, it makes things so much easier. So that's a big opportunity for like to use the technology for government, a central bank, and to make things better and more efficient. That's number one. Number two, for the crypto ecosystem, I think it's like I would say the analogy that I would use is it's a Trojan horse, because like if you work with a central bank, and if you're coming from crypto, you work with a central bank to help them understand like what's a wallet, how you do a blockchain transaction, blah blah blah, how all that works. And if that works properly, well, the central bank is going to drive the adoption of a blockchain infrastructure. And today, that's really what's lacking, because like, we know the space, we know what Bitcoin is, we know what a blockchain transaction is. But if you like, even today in 2020, if you don't know, how to do a blockchain transaction, it's extremely clunky from a user experience perspective. Like, think of these people that work in traditional banks. I mean, understanding what the wallet is, how to secure a private key and all that. That's extremely difficult to do, and they're not going to do it for Bitcoin. But if the central bank, like if the European Central Bank, or if the Fed, start issuing currencies on a blockchain, well, they'll have to make this infrastructure step to adapt to let's say tokenized assets in general. And once they have this infrastructure, well, it's very easy for them to accept Bitcoin. It's not an infrastructure problem. It's just like, do we want to do this or not? Like, it's not can we or can we not? It's like, do we want to do it? And so that's, I think that's something that the crypto community and companies in general working in the crypto space should try to push for, to help people understand how those technology work, how those assets work, so that in the end, the infrastructure is there and it's more business for crypto in general.
Okay. What do you think about the threat to, say private banks, or to just privacy, surveillance issues? What do you think about all that stuff?
So yeah, that's completely fair concern. Like it's a double-edged sword. Like it can be a stablecoin can be like a big instrument of financial freedom. Anybody can have access to a bank account with like with a smartphone. So that can be a very good thing, or it can be a very negative thing. It can be like an instrument of almost oppression, right? Of financial oppression, where basically the government knows what you've been buying, with who you've been transacting, and there's always two sides of the same coin, right? But like even more so there. And so I think the privacy aspect and the governance of the network is absolutely key in how you implement CBDCs.
Right. I'm not sure whether I haven't decided yet whether I'm more or less comfortable with the government knowing what I spend my money on than, say, Visa or MasterCard knowing what I spend my money on. I haven't decided what makes me more uncomfortable.
But you do still have the anonymity of cash as of now, which you
Yeah.
would not in the case of a CBDC that basically.
Sure, but I haven't used cash in years. Right.
Well, where you live, that might be okay, but maybe not if you're in a place that's, oppressive for whatever reason.
Yeah, sure. Yeah.
But you can still have like the privacy coins like Monero, Zcash. I think they're here to stay just because of that, just because of this fear. And even when you look at Bitcoin, Bitcoin is not so private anymore.
No, it's not.
No.
That's right. Now, a lot of people don't understand that. They think it's anonymous, right?
No, it's you have so much insight, like much more than just cash if you know how to look.
Yes.
Right. So privacy coins are here to stay.
Yeah, I think so. Yeah, I think so. And the it's going to be the everlasting battle between like governments or service providers. Like, will they accept a privacy coin as an exchange versus a fiat currency? Because like the usability of like today, same as with Bitcoin, like it's very difficult to buy a coffee with Monero, and so you need like either intermediaries that change the Monero in dollar, or you need businesses that accept Monero. And so that's the problem of adoption, like the same cycle all over again. Same thing with Bitcoin, but like here, the fact that with Monero you cannot really trace a transaction makes it a little bit more difficult. But it's not so different than cash, that businesses accepting cash. So, that could be
There's some interesting innovations with Lightning Network technology and those kinds of things that might enable some more privacy.
Yeah, absolutely. That's a good point.
So, Paul, are we going to go into our definitely not financial advice little segment here? Is that our next here?
Definitely not financial advice. So, Hugo, every week, or every episode, we do a definitely not financial advice segment, and we're going to sort of put you on the spot in this week as well, if you care to partake, in which we make a prediction, and I bet 8 trillion Verge tokens, which is about 37 cents this last count, against Darren's 48 million trons, which is worth something like $1.37 or something.
Ooh, I'm up on it because I won the last bet, didn't I?
You did win the last bet.
Yeah.
And however, my form hasn't been great, Hugo. We've both been wrong. Darren got one right once, and we've done this a number of times. So
which is why we call it definitely not financial advice.
Yeah, it is absolutely he's definitely not financial advice. What I'm going to do this week, though, in the definitely not financial advice section, is definitely not financial advice. I'm hunkering down on my last call, which is Bitcoin is price bound in this range at least until next year.
And you see, I was saying if Bitcoin can hold at 9,000, that's very bullish. And my feeling is that late August. Now, of course, this is, again, we're talking longer term here again. We used to do the 1 week time span, and we realized that didn't work so well. It's impossible to get a prediction in that short of a time span. But my thought is that by late August, we're going to be looking at Bitcoin breaking past 12,000 USD. I think it'll hold here at 9. It might take a dip as low as 7,800 is my feeling. That's kind of where there's the most buying and selling action and support before it rebounds. And rebounds, once it hits 10, it'll hold there for a little bit with a little bit of resistance, and then pow, it's going to break through. Kind of like last summer. Last summer, I think it went up to 14 or so.
Right. This is based on your extensive abilities in technical analysis, obviously.
Oh yeah, super duper. Yeah. Wendy O made me look like a fool when I tried to.
Well, you still got it right.
I was right though, and she agreed with me. So
Yes. Yeah.
the other one that was interesting to me was this whole craze going on with Compound and DeFi.
Yeah. Yeah.
It's just had this enormous boom, and it had a really strange moment of extreme volatility. I don't know if you've seen this.
I saw it today. Yeah.
I don't know what the story is to that yet, but it went from a total value locked at 1.67 billion, way like half down, like less than 800 million. But I cannot find any evidence of what's going on there exactly. I just know that the total value locked in DeFi has basically fallen by half. It could just be a blip, could just be some kind of liquidity issue. But I feel that it feels like weird. That's a little overbought. If that's just some kind of weird glitch, then that's fine. But I'm feeling like there's too much hype there. I don't know. I feel like that'll pull back.
Well, what are your thoughts? Compound dominance is now at 37%. So it's not maker dominance anymore. It's compound.
Right.
Like
but if you look at
Tron dominance, right?
Yeah. If you look at AV or AAVE, they had an enormous jump in one day, a 40% jump. So I don't know what's going on there. There's something strange happening. But I feel like it's a little overbought right now, hyped up. Any predictions from you, Hugo?
The predictions. So Bitcoin price for me, like it's the way I invest in Bitcoin. You know, I don't try to time the market. So to me, it's like, is it going up or is it going down? So for me, it's going up, obviously. Like where, I don't know, but like honestly, I think that more than 80% of my net worth is in BTC. So I hope it's going high. You know, the way I see things, like the micro, it's fascinating what's happening to me with Robinhood these days. Like the Robinhood effect on markets. The fact that you have people that make bets and have a lot of available income because like you have those stimulus checks and whatnot, you know, and they're making crazy bets which completely derail the price of assets with the underlying value. Like it makes you think that, you know, this is something that could be just a trend because like people are like they have, it's just, you know, kind of weird times, but it can also be like something that can be a bit longer term. So bottom line, if companies like Hertz can do 500% in a couple of days, I think Bitcoin can definitely do 500% in a couple of months.
So Cirque du Soleil is your next big investment? Is that what you're telling me? I think they went into bankruptcy protection today. So, you know, that's our next big buy.
Yeah. So that's, but yeah, that's a bit crazy. So
that was crazy. Yeah.
So, you know, like, it's definitely the time for Bitcoin. So I wouldn't be surprised if we break past the $15,000 in a couple of months.
See, Hugo's with me.
Yeah, no, I'm quite bullish for the end of the year, honestly.
So Hugo, 5 years from now, where are we? What's the ecosystem? Is everybody using it? Everybody's it's normal to be spending Bitcoin, stablecoins, buying coffee with Monero. Where do you see things going?
So first, if you asked me in 2015 where are we going to be in 2020, I would have never guessed, you know, what would be happening. So I would say I wouldn't be surprised if there was one country that would adopt Bitcoin as a currency, right? Especially a country which is extremely dollarized, or Bitcoin or another asset. You know, like I wouldn't be surprised. Like that would be a bit. It's probably not 5 years, perhaps 10 years, but you know, like a country which has no local currency whatsoever. Like it's not used. The people in this country use dollars. So you know, why not use Bitcoin? I think the infrastructure switch will come much faster than we think, especially with the CBDC aspect. So, you know, the whole payment rail ecosystem, which is extremely complex and key as well in how we make payments today, is in 5 years' time will include some aspect of crypto payments, which will make it extremely easy for people to use a credit card and pay with Bitcoin, for instance, which today is completely, like, it's very difficult to do. So those like kind of lower level innovations that will be done. I think the infrastructure will be there. And yeah, we'll see about stablecoin adoption, but hopefully, like we'll have real currency issued in tokens on whichever blockchain the central bank chooses, but like not just like cash or bills, like actual tokens. So that's what I would think. Like infrastructure, figured out. People can very easy to create to use crypto and stablecoins as part of your business. One country that uses Bitcoin as a semi-official currency, or that holds Bitcoin in their reserve, which is to me the same thing more or less.
Yeah.
And yeah, perhaps like the adoption of more of DeFi as a broader business. Like today, like if you're a regular business, you don't have like the financial aspect. But when you think about it, Uber, Lyft, they're providing financial services to their drivers. They're providing like semi-banking services to their drivers.
Yeah.
So why not provide a yield or an interest-bearing compound account to your clients, to your employees through the use of DeFi. So that could be something that develops in the next 5 years as well.
Right. That's cool. That's great. So a dollarized country, you're talking. I mean, I can think of a few. Cambodia's one, Zimbabwe's another. You're talking a country like that.
Yeah, depending on it depends on the relationship that they have with the US and what they do. But I wouldn't be surprised. Perhaps a more conservative bet would be to say that one country will hold Bitcoin in their reserves. Like will hold Bitcoin in their reserves in 5 years' time. That's a more conservative bet, and I think that definitely can happen.
I could see some interesting, maybe like hash wars, where, certain countries start mining it more.
Yeah.
Like Iran's been talking about that more. And, if they can get into that and get away from having to settle in American money or whatever,
yeah, absolutely.
Potential there.
No, that's a good point. Yeah.
That might come sooner.
Yeah. Well, Hugo, it was great to have you on. We'd love to invite you back 5 years from now to see how much of what you said today turns out. It was really, thanks for joining us here on the Crypto Radar podcast. We really appreciate it. We like to get a nice eclectic blend of guests to talk to, and congratulations on your exchange and good luck with everything in the future.
Thank you very much, guys. It was a pleasure.
Thank you.
And that is another episode of the Crypto Radar podcast, folks. Done and dusted. Subscribe, subscribe down below and leave comments and make your own predictions. Where are we in 5 years from now in the crypto space? Thanks for joining us.
See you guys later.